Premier Media's Mining Weekly Online is speaking to Mxolisi Ngojo, the CEO of Exxaro. Mxolisi, could you give us a word picture of your results which you're just presenting today?
Thank you very much, Martin. I think this half year has been a challenging year for Exxaro insofar as the operations that we control, mainly the coal business. And that has really been primarily due to probably two factors. The first, obviously, we've seen how the coal price has come off in this first half from around $91, $92 at the beginning of the year for API 4 to the levels of below $60 right now. And of course, that has had a huge impact in terms of what we originally envisaged coming out of the second half of last year. So it's been really exacerbated by that, and you'll see in the results that there's been just on the revenue and on the EBITDA line, now that has taken $1 billion right off, just prices on its own. Another contributing factor in the first half was primarily due to the Medupi offtake as a result of Eskom not being able to take the volumes that they originally envisaged. We also are aware that in the first half, especially in the first quarter, Medupi had indicated that they had some contractual issues with some of their contractors that were responsible for their ash handling plant and also on the transport of coal from the transfer point to the stockpiles. So that was a big number of about 800,000 tons, as you can appreciate it. But as on a revenue line point of view, that didn't have so much an impact because, as you all know, the take-or-pay penalties that apply on both sides. But what is very promising for us is the fact that we have been able to respond to the challenge because, you know, prices we cannot control, exchange rate we cannot control, the geopolitical issues we cannot control. But things like our own projects, our ability to manage costs, these are the things that we've been really, really working hard on as an organization. And to the extent that, you know, we had indicated to the market that we were going to try and bring Belfast mine much earlier. Now Belfast has been producing coal since around May now, and that was an RB3 product. As of the end of this month, we're now going to be producing an RB1 product. So there's coal, the ROM tons are before the plant, and so we are on track 6 months earlier on that project, still within budget. So these are some of the controllables. We've also been very working hard on rolling out our digitalization strategy, which enables us to establish right across all our businesses the integrated operation centers that create visibility throughout the whole value chain. With that visibility, we're able to understand our operations much better, get better insights, much more visibility, being able now out of that to understand where the efficiencies are in the business and how we respond to those inefficiencies by taking very proactive actions. So these are some things that we are doing. We also see very positive trends also now looking into the second half, already seeing positive trends on the Medupi side, for instance, in terms of the coal schedule to be taken. So we're seeing positive signs on that side. We are also seeing positive signs on the ramp up of Mafube. And as I said, Belfast is ramping up. And we've been able to also, in response, and this is where I think Exxaro has a really, really good competitive advantage, is the repertoire of products that we are able to produce at any point in time to respond to market dynamics. We will see that in our results, we show that for the first time this first half, we have created an RB2 product. And that was a result of the response to the oversupply of the RB1 product, where there was so much in the market that its price was much lower and we could get better value in the market, and there was more demand for an RB2. We were able to produce and create that product. So that was really part of our market, to resource strategy. So we are pulling all the levers, which are the controllable levers. We're also going to be seeing ECC ramping up in the second half. You're going to be seeing the Lupan also ramping up. We're also looking at how we are reconfiguring some of the markets between the exports and the Eskom. So Eskom is still looking for more coal. And so we are trying to see how we can play the markets from a values point of view, but also while being responsible, ensuring that we manage our costs in a way that is within line of inflation. So this has really been the sum, and of course, the great news that everybody is happy about is the fact that despite the challenges, we still were able to pay a decent dividend, which talks to the strategy that we embarked on from a number of years ago of optimizing our portfolio. Now we're at that stage. Now we've been optimizing our Tronox portfolio through our divestment program, and out of that we've been able now concurrent 2 years to pay special dividends. We are left now with about 14 million shares, and we will wait at an appropriate time as to when we will diversify that based on where the market is within that particular investment. So yes, it's been tough. It continues being tough. The outlook for coal prices in the second half continues to be very, very challenging, but we will be ramping up our RB1, and hopefully, you know, our GG6 Phase 2 project that we had hoped to have come at the last quarter of this year, that will come in at the first half of next year. And as we also indicated in our release statement that, you know, big challenge that we had there was the Group 5 issue earlier on in the year, where part of that project, which was a small coal plant, was supposed to have been in operation from the end of this year. But because of the delays or the problems with Group 5, we had to actually cancel that contract, demobilize, get a new contractor, and mobilize again. And we had been able to do all of that within 3 months. But fortunately, the impact on that is that only 330 million of the 4.8 billion is impacted by that. So we are very confident that come 2020, first half 2020, we're going to see a much better projection in terms of volumes as we are ramping up, and the exports are going to be increasing. Already we had promised this year that we're going to do about 9 million tons. We did 4.3 this first half. The second half we are anticipating another 5.3. So we're going to be looking at about 9.6 million tons, 600,000 tons, probably more than what we originally told the market at the beginning of the year. So yeah, things are, where we have the controllables, things are really shaping up well.
And all South Africans are worried about Eskom. Are companies like yourselves working well with Eskom for the good of the whole of South Africa?
You know, we are looking at all options that we are trying to assist Eskom with. You know, part of that is the conversations that we are having with them, also with TFR, of how we can actually help them evacuate some of that coal from the Waterberg into Mpumalanga. So we are working first on a test train that we want to utilize as part of that initial first test. But we're also looking at how we can help them with a longer term solution of probably helping them and assist them putting up a siding next to their own stockpile where they will be able to evacuate that coal in a much more consistent manner. So there's a lot of work besides just you know, responding to their coal need requirements, but it's actually how we can help them beyond that in terms of evacuating some of the coals that are sitting in the water, because they've got huge full stockpiles that are sitting there, and of course they are paying for this coal, and so let's help them to see how they can burn it in wherever it's required beyond just the Waterberg.
So it's good to hear that there is cooperative energy going on in the business and public sector to try and get things right. There's also the integrated resource plan that's coming up pretty soon. Is there anything that you believe should be in that to assist the energy situation in South Africa at the moment?
You know, obviously there's a whole call towards a low carbon economy. And I think we all very much understand, especially Exxaro is very conscious about the whole issue around climate change. And we are looking at how we're going to be responding to that. We've highlighted in our results that we will be coming back with a strategy as how Exxaro intends to respond to climate change issues. But the complexity you have in South Africa is the fact that, you know, you have to do it in a just manner. There has to be a just transition, given the social dynamics that we have in terms of high unemployment, high poverty levels. So if this is not done in a just way, where in the process of moving to a lower carbon economy, the displacement and the impact on broader society, especially in the poor area, you know, communities where a lot of these mines are happening also, one has to take a balanced view. It's not one or the other. We have to transition. And that's what I think we need to understand. How does that transition look like? And how do we ensure that it is done in a way that is not going to create more pain than what is necessary?
And is there dialogue going on between the public and private sector to ensure this just transition?
I don't think enough has been done. I think more should be done. And I think all the parties need to get together. Those who are also really promoting the clean energy, renewable, so that they can understand the dynamics, so that in a way that we move forward, it's not this or that. It's about how you transition collectively, but in a way that does not create, great pain to the rest of the society.
And I think Exxaro has always been far-sighted on this. I mean, you've got the synergy arrangement where you've got 50%, you're already in wind and you're already in sun. So you were far-seeing on this. Is that far-sightedness going to bring any benefits?
Well, I think we have no choice but to go towards a lower carbon economy. So for us, it's not about whether we just want to remain in coal for forever. There is still a lot of opportunities in coal, especially in metallurgical coal. But what we are also saying is that we've been endowed with a lot of resources, and part of our early value strategy is about how can, during the period when we are still going through this transition, we can extract as much value of our current assets that we have in a way that we can also use the benefits of that value, not only just for the shareholders, but also just enabled and plowing that back to communities in various ways in terms of the programs that we're running, social labor plans, and other ways that we can actually support new economies. So you need this to fund that. So that's part of that transition. But what we don't want to have is a situation where we end up with stranded assets but haven't realized value by really understanding that we have to transition, but we have to ensure that we can maximize the value in the transition at the same time.
And your vision, do you think that being in renewable energy already, being in sun and wind, you might take other opportunities that stem from that now? I mean, if we use that renewable energy, with electrolyzers, one can create hydrogen, for instance, and you are an energy company. Yeah. Do you envisage going further along the line?
Yeah, no. Part of our whole transition is about how do we play into more cleaner energies into the future. So we are looking at that. We are doing a bit of studies about how do we position ourselves in terms of the energy space. How do we become much more green in the energy space? So yes, it's something that is going to be evolving out of our strategy, and so far as playing into synergy, and then looking at now, given the fact that we are conscious of climate change issues, that we have to do this transition. But we need to do it in a way that, as I indicated, is just, but also in a way that we can actually build a new core around that, and that will eventually become the second core into our business going into the future.
And metallurgical coal, are there opportunities in that area which will take you out of the energy coal but still keep you in coal?
Yes, there is. The Moramba South project. We have now with Anglo Metallurgical Coal in Australia, the two teams now are revisiting that project with the intent of coming up with a program to actually develop this that resource. So that has started now.
And just final question, what could you do to sort of start up a good, positive dialogue between the public sector and the private sector for the benefit of South Africa?
We have, I think, to a very large extent, through various associations, whether you're talking about BLSA, whether you're talking about the Mineral Council, we as business have been saying to government, we are ready, we are willing to engage. We have been engaging, but we want to go beyond engaging. We want to start saying what are the key concrete things that need to be taken in terms of ensuring that we can turn our economy in a positive trajectory. We are willing, we are ready to support, we are ready to create capacity and capacitate areas like where we are mining, where there's municipality, where we can be prepared even to put funding, our own money into actually creating capacity in terms of driving critical projects that are required in those areas. We are ready. We are just waiting now for government to assist us insofar as enabling us to play in creating and making these things happen.